Good morning, everyone, and thank you for choosing the market briefing analysis of today's financial news. Every day, our goal is to provide you with a thorough and knowledgeable analysis of the most relevant financial news to help you navigate the complex economic landscape. Let's begin our daily review. Financial news, June 20, 2023. In today's international financial news, Asian stocks have remained steady, but the yuan has rallied on support from the People's Bank of China, PBOC. The MSCI Asia Pacific Index showed little change, with Hong Kong's Hang Seng Index giving up most of its earlier gains, while Japan equities, European, and U.S. futures experienced declines. The market sentiment has turned skeptical despite China's plans to boost private businesses. Traders are expressing doubts due to the lack of concrete measures accompanying Beijing's pledge. China's efforts to stimulate economic growth, including interest rate cuts and regulatory crackdowns on tech firms, have yielded limited results in supporting the world's second-largest economy. However, there is some respite for the property sector, as Chinese authorities are considering easing home buying restrictions in major cities, leading to an increase in shares of developers. In terms of the yuan, the People's Bank of China stepped in by setting its daily fixing with the largest bias since November, aiming to bolster the currency, which has experienced a decline of more than 3% this year. The offshore yuan has performed well, gaining 0.7% against the dollar and becoming the best-performing currency in Asia. Moving to the global market sentiment, there is a notable shift in risk mood, with U.S. stock index futures trading in negative territory. This change in sentiment is driven by escalating tensions between China and the U.S. and lackluster performances from technology stocks following uninspiring earnings. The focus of investors is now on key data releases scheduled for the U.S. economic docket, including weekly initial jobless claims, June existing home sales, and the Federal Reserve Bank of Philadelphia's manufacturing survey for July. Additionally, the European Commission will release the July Consumer Confidence Index. China's ambassador to Washington has issued a warning, stating that China will respond if the U.S. imposes further restrictions on the country's chip sector. This development has impacted the Shanghai Composite Index, which fell by nearly 1% on Thursday, and the Nasdaq futures, which have lost nearly 1% on the day. The US dollar index is consolidating its gains from the previous day, holding above the key level of 100.00. Meanwhile, the benchmark 10-year US Treasury bond yield remains in positive territory, hovering around 3.8%. During the Asian session, the People's Bank of China announced its decision to keep the 1-year and 5-year loan prime rates unchanged at 3.55% and 4.20%, respectively. Meanwhile, Australia's data showed that the unemployment rate remained steady at 3.5%, while employment change surpassed market expectations at plus 32,600, compared to the projected 15,000. In response, the Australian dollar to US dollar, gained bullish momentum and climbed above 0.6800. In the major currency pairs, euro to US dollar, despite closing in negative territory on the previous day, managed to rise above 1.1200 early on Thursday. Conversely, pound sterling to US dollar, which experienced a sharp decline due to soft inflation data from the UK, struggled to stage a rebound and remained slightly above 1.2900. US dollar to Japanese yen extended its weekly uptrend, but its momentum waned after testing 140.00 on Wednesday. The pair is now relatively quiet, trading around 139.50 in the European session. In the precious metals market, gold prices touched their highest level in 3 months, reaching $1,987 early on Thursday. However, with the 10-year US yield trending upward, gold ounce per US dollar retreated to the $1,980 area. Before proceeding with our analysis, we would like to remind you that your support is very important to us. If you enjoy this video and find our content helpful and engaging, please consider giving it a thumbs up and subscribing to our channel. This helps us grow and provide you with even more quality content. Now, let's get back to the news on the financial markets and the latest updates. Cryptocurrencies also experienced some movement. Bitcoin failed to make a decisive move in either direction on Monday but advanced beyond $30,000 early on Thursday. Ethereum gained traction, climbing above $1,900 after experiencing 6 consecutive days of negative performance. In conclusion, today's financial markets are showing signs of risk aversion as traders brace for U.S. data releases amidst ongoing geopolitical tensions. The U.S. dollar and U.S. Treasury bond yield remain in focus, while major currency pairs exhibit mixed movements. Investors are closely monitoring economic indicators and geopolitical developments for potential shifts in market sentiment and trading opportunities. Analysts suggest that if Chinese authorities implement broader easing measures in the coming months, there could be a quick turnaround in public sentiment in the Chinese market, leading to portfolio flows back into the country. On the international currency front, the dollar has fallen against all of its group of 10 counterparts, and a gauge of the greenback shows a month-to-date weakness of more than 6%. Speculation has arisen that the Federal Reserve's hiking cycle may have peaked, given the easing inflation. Japan's balance of trade swung unexpectedly to a surplus in June, marking the first surplus since July 2021. This has contributed to the yen's slight uptick. Investors are hopeful as evidence of easing price pressures in the US and UK suggests that a campaign of monetary tightening may be drawing to a close. However, shaky economic reports indicate that the Federal Reserve is not ready to claim victory just yet. Treasuries have steadied after gaining Wednesday when British inflation dropped to the lowest level in 15 months. This development further supports the belief that central banks may adopt a more relaxed approach to interest rate hikes. However, the situation may be influenced by geopolitical tensions, such as Russia's warning that any ships to Ukraine would be seen as carrying arms. In the technology sector, Taiwan Semiconductor Manufacturing Company reported higher than expected net income for the second quarter, signaling continued improvement in the semiconductor industry. In the U.S. market, futures for the S&P 500 and NASDAQ 100 experienced a slight dip in Asia after Netflix Incorporated and Tesla Incorporated faced challenges. Netflix's sales missed estimates and its third quarter forecast fell short, while Tesla's profitability shrank in the second quarter. Elsewhere, the oil market steadied despite concerns about persistent demand and a strong dollar, thanks to drops in crude stockpiles in the U.S. On the precious metals front, gold prices edged closer to the highest point since May. Overall, the financial markets are showing cautious optimism, with mixed performance in various sectors. Companies like Tesla and Netflix are reporting record revenues, while Goldman Sachs faces challenges in its profit margin. Meanwhile, the broader market sentiment remains positive, with investors managing expectations and remaining hopeful for further economic growth. The market's performance is closely monitored by traders as they look for signs of continued rally and potential opportunities for growth in various sectors. Key events this week: U.S. initial jobless claims, existing home sales, conference. Board leading index, Thursday. Japan CPI, Friday. Some of the main moves in markets. Stocks. S&P 500 futures fell 0.1% as of 6:30 a.m. London time. The S&P 500 rose 0.2%. Nasdaq 100 futures fell 0.4%. The Nasdaq 100 was little changed. Euro Stoxx 50 futures fell 0.2%. Japan's Topix index fell 0.7%. Hong Kong's Hang Seng index rose 0.4%. China's Shanghai Composite Index fell 0.2%. Australia's S&P ASX 200 index was little changed. Currencies. The Bloomberg Dollar Spot Index fell 0.2%. The euro rose 0.2% to $1.1220. The Japanese yen rose 0.2% to 139.35 per dollar. The offshore yuan rose 0.7% to 7.1846 per dollar. The Australian dollar rose 0.8% to $0.6829. The British pound was unchanged at $1.2940. Cryptocurrencies. Bitcoin rose 0.3% to $30,044.75. Ether rose 0.2% to $1,901.93. Bonds. The yield on 10-year treasuries advanced 1 basis point to 3.76%. Japan's 10-year yield declined 0.5 basis point to 0.455%. Australia's 10-year yield advanced 9 basis points to 3.96%. Commodities. West Texas Intermediate crude was little changed. Spot gold rose 0.4% to $1,983.88 an ounce. In conclusion, we'd like to thank you for watching the market briefing analysis of today's financial news. If you enjoyed our insights and found the information helpful, please consider leaving a like and subscribing to our channel to stay updated with future analyses. Thank you again for your support, and we'll see you soon with more fascinating news. Remember, the information in this video is purely informational and does not constitute investment advice. Always consult with a professional before making financial decisions.